Hello, traders. It's our first meeting in this year. It's 2026. Yeah, time runs quickly. And at the very beginning, I would like to wish you all the best. I prepared specially a card for you. So good luck in the FTFI trading course. Good luck in your future trades, and of course, a lot of success, profits, and good health for you and your family. But let's start as usually our first meeting this year. Uh, take a short look at the markets, and we see that the treasury bonds in USA, they are about 4.18, 4.19%, which is rather a high level. It's not a low level. And so people are still buying, investors are still buying the bonds because they are giving good return. We know that 2 days ago there was some geopolitical developments in Venezuela. So we saw as impact of those things which happened in Venezuela on markets also. Initially, many currencies lost against dollar, but very quickly they gained back the losses in the same day. Of course, the winners are gold and silver as typical safe havens. Um, that's why we can see that the rally on gold and the rally on silver is still on, and it's not stopping. We also saw some data from United States which was signaling some small declines in the factory sector since 2024. But is it indicating the weakness in the sector? It's hard to say because some data, especially at the end of the year, might be a bit mixed, especially there's a lot of holidays at the end of the year. We also see that the Fed members are slowly turning to more dovish stance, and they expect the Fed will have to cut interest rates at least twice next year. The next meeting of Fed is on the 28th of January, and it might be that looking at the expectations, they might not cut the rates on January. I also think that January is too early to cut the rates. Maybe if we have very good numbers from the inflation from USA, then maybe they will cut the rates. But remember, we have this week very important event, which also might have influence on this, what we'll see at the 28th of January. What I mean, important event? Well, let's take a short look at the calendar. And the event I mean will happen on Friday. But before we go to Friday, we have tomorrow some data from Australia. We'll take a closer look to the Australian dollar because the CPI report from Australia might be important. It might be a volatile event for Australian dollar, especially that it happens in the night when the volatility, maybe the liquidity is lower, less people trading, less companies trading. Europe is closed, USA is sleeping. So even one big trade order can change a lot on the charts. But what is typical for Australian dollar and New Zealand dollar, even there's a spike of 50, 60, 70 pips sometimes, market usually returns back to the levels when everything started. So be prepared that if there are any volatility in the early morning tomorrow, it might be on a short term. It could work for, it would be actual for a short term. We have also inflation data tomorrow from EU. I don't think it will have any impact on the markets, especially that the European Central Bank decision was done. We have the interest rate at the level of 2.1%, so it's just 1 to 1. So no, I don't think that it will have any impact on euro. Maybe 15, 20 pips, but not so much. Much bigger impact on the markets can have tomorrow's Wednesday's sorry ADP employment change, and those I call them small payrolls. Why? Because they take into consideration only a part of the market, about 20-25% of the labor market is controlled by ADP, so it's a batch, but it's not. Those are not the old data. But remember that on Friday we'll have the real payrolls. Non-farm payrolls on Friday. Those will be complete payrolls. First time after 3 months. You remember the shutdown of government made the government not working, and also the Bureau of Statistics, labor statistics, didn't collect the data. So all the data which we had a month ago, 2 months ago, were not real, not true, in my opinion. Now we have completed data from December, and it looks that they expect a bit lower numbers than we had a month ago. Because month ago we had about 70,000. Now market expect about 55,000. Okay, but only if the numbers here will differ strongly from the expectations, then probably we can see some volatility. But what's important, the stronger the market, the stronger the dollar. And look at I wrote a small explanation of how we should treat payrolls, and this is here. Let me check it. I think no, it's not that. It's probably this one. Yeah. So 9th of January, Friday, the non-farm payrolls, and stronger than expected typically strengthens the US dollar, and the weaker usually weakens it. But be prepared that sometimes the numbers can be, the reaction can be absolutely different. So the best way to trade such news is just wait for the news, see how the market is reacting, and then join it. Don't try to expect something and trade it, because sometimes our expectations are absolutely different than the reality. So as I mentioned that we have in the morning the inflation data from Australia. So let's take a look at the charts and let's see how the Australian dollar looks at the moment. Well, what is interesting in this chart is that look, you can take a closer look here. We had a divergence here, and look at this divergence, which should normally push the Australian dollar lower. It was very quickly broken. If a divergence is broken, it's usually a signal of a very bullish market. So if you see tomorrow after the CPI report, Australian dollar climbing, don't try to short it. It's probably another leg up. So we could even expect 100, 150 pips in a few days, because this is a very important supply zone. If you look at the supply zone from the higher perspective, you can see that here we have a maximum, which was not tested yet. So if tomorrow's data will not spoil Australian dollar, be prepared for another move up. What's also interesting here, if we take one small closer look, but on lower time frames, we see that market broke out from a triangle. Now they are testing this supply zone on the 1 hour chart. If tomorrow they are climbing higher and they will not be rejected on this supply zone, be prepared really for a nice move up to here in few days, because you see the market is not moving much. The max in one day, that was 50 pips, so don't expect they will make 160 pips in one day. But anyway, it's very interesting how the market will behave after the data. If we look at the daily chart once more, we can see that breakout from the triangle, it was a bullish engulfing pattern. You know that when we have a bullish engulfing pattern, which is not on the bottom of a swing because it's somewhere in the middle of the swing, it's also not on the top of the swing now, because the top was here. It's usually we treat it as a continuation pattern. a continuation pattern at that level, it's also a strong signal. So generally, if there would be no data tomorrow in the morning, which is a risky event, I would go long. But because of the data, I don't want to go long before I don't see the results. Look, by the way, what happened here. We see that this instrument is respecting candlestick pattern. This is a bearish engulfing pattern. And look, when bearish engulfing pattern was broken with this candle, it signaled on the MACD that it's time to sell. And starting from here, we had nice 100 pips correction. Then there was an attempt to test this pattern from the bottom, and again they continued. So there were two bearish swings with a correction on the way. Here we still are in a bullish swings, bullish. Yeah, it's a bullish swing. I'll call it this way. We have a bullish swing one, then correction, a bullish swing, a correction, and I wouldn't exclude such a scenario. But first, let's see the data, and after we see the data, we can try to trade it. So this is all about Australian dollar, but I found also two other instruments which might be very, very interesting in close future. One is Euro Kiwi. Let me show it. Euro New Zealand dollar. I'm trading it already. I have two short positions on it. But what I wanted to show you, we had it for a very long time. It's nearly 1 year of bullish swing, a bullish trend on Euro New Zealand dollar. Perfectly a year ago, we were at that level. So during oh, it was even here, sorry. Yeah, it's okay, this is the same. So during the year 2020, this instrument went up 2,500 pips. It's a lot. And now maybe it's time for a correction. That's why if we take a closer look at the structure here on the top, it looks like it could be giving us a chance for a head and shoulders pattern. I don't say that it will be, but at the moment, look, we have the shoulder here, we have the head, sorry, and we have another shoulder. Market is somewhere here. Why not complete it? So I still believe that it might be something like this. And then comes a question, what further? Because this is the neckline of a not completed head and shoulders. It's not said that they have to break the neckline and go here. But if it happens, if they break the neckline, we could really expect market coming somewhere here. So I'm rather thinking about shorting it because I have two positions, short positions. My target is at the moment the neckline. But if they break the neckline, there could be a kind of a small pullback, and then again they would probably continue this drop down. What is interesting here is this level, maybe I'll mark it here. Not this one, sorry. This level here is very, very interesting because it was a strong resistance. The market stopped rapidly and went down. Of course, this one is also interesting, but this one is very close to the neckline, so I don't pay so much attention to it. But this one is also interesting. So be prepared that after a breakthrough, if it happens, there'll be a strong pullback and then maybe continuation of the declines. What more? We can also take a look at the MACD. And if I remove now this, and when we look at the MACD on the weekly, it looks also bearish, and it looks like a huge head and shoulders pattern also on weekly. See, shoulder, head, shoulder. Why not? It could be a very important moment if they break the neckline. Breaking the neckline will open the doors for more declines. And another instrument which I found also interesting is pound with yen. Pound with yen today hit another high, but I want to show you what is happening on the 4-hour chart. The 4-hour chart is creating a nice bearish divergence. And you see that? It's really a big chance for a bearish divergence. The problem is only that at the moment they broke out from a triangle, which is here. I'll draw it once more. Here's the top of the triangle. Here's the bottom. It's a typical symmetrical triangle. Symmetrical triangles are bilateral, which means they can break both directions with the same probability. And here, I think that at the moment market is trying to break back to this triangle. If they will do it, I believe that market will try to test this demand zone, especially that this bearish divergence is supporting us in selling. So probably it's good to wait and see what happens. But at the moment, I will be more bearish than bullish. How can we trade it? Well, it's better to wait until tomorrow, because now if we open a short position, we pay a big swap. Here are big swaps on pound yen, negative swaps if you are shorting this pair. So maybe better is to trade it tomorrow after we see how market will react on the data from Australia. And in the morning when Tokyo starts working, maybe we'll see some comments from Bank of Japan. So be prepared that we must listen to those news, because those news from Bank of Japan might change a bit the bias on the markets. By the way, the Bank of Japan, what I read today in the morning, exit stimulus into new era, which means that they are reducing liquidity. They are no more buying such big amounts of Japanese government bonds, which this is the JGB, Japanese government bonds. And it seems that if the Bank of Japan is tightening the monetary policy, it usually in longer term should make the currency a bit stronger. So be prepared that yen might be a bit bullish in coming weeks. Of course, the more we hear about the monetary policy in Japan, that they are exiting the ultra loose policy after so many years. Last time they had it's over 15 years that they had a very loose ultra loose monetary policy. Now they are trying to make this deficit smaller, and they stopped buying the bonds. The yields for bonds in Japan went up to over 2%, which might attract buyers, international investors, which would help to keep the budget on a good level. And the yen should get a bit stronger, because to buy the Japanese bonds, you need to pay with yen. So you need to sell your dollars and buy yen to buy the bonds. So, things, it's only theory, but I feel that the yen might become a bit stronger in coming days, weeks, or months. So, or just at the end of the session, let's take a look at yen. And in my opinion, if you look at the chart, yen is at the moment in a consolidation. They are moving, they are trying to break the supply zone, they are reversing. And look that we have here also an interesting structure. We go to 4-hour chart, we can see that market is at the moment moving in a geometric pattern. It's a symmetrical triangle, and as long as they are in the range, it's hard to say what's gonna happen. But if they break the bottom, I believe yen will be getting stronger somewhere around this area. It's 154.50. But of course, there's also a situation, there could be such a situation, they'll break the top, and then who knows where is the end. But I believe that Bank of Japan will try to intervene if dollar yen is going above 159, 160. Okay, so that's all for today. So once more, I wish you all the best in the coming year, and believe me, I'll be really very happy if you will be more active on the group, because if I see any comments, it means that you are reading, you are watching this, and I'll be very happy to answer. So once more, all the best in coming year, and see you next week live like this recording, or if I find anything interesting during this week, I'll of course post it, like I posted last yesterday, this setup on Pound. See you. Bye bye.